Hey traders, let's kick this premium video off with a look at the intraday charts. Now, one of the things that I mentioned earlier is the caution day. For race fans, that's your yellow flag. And what is a caution day? It's the scheduled events that, when released, have a way of, well, one, of course, initiating a tremendous amount of volatility, but two, it sort of sets the mood for a lot of excessive moves in one direction or the other. It can be a day that the market just continues to rip higher because of the news or chop around in confusion because of the news. We don't know, of course, hence the caution. The unscheduled variety of news, which we've dealt with throughout the week, is different than a caution day because we don't see it coming. We see caution days coming, right? So we can practice smaller position size, more conservative levels, or even just being flat on a day like today. So what do we get, by the way, on the open? And really, let's come back to the yen, because I don't want anyone thinking that, we're not focused on what's going on in this yen anymore. Now, one thing to remember when it comes to the yen is, while we can look at it through the prism of the dollar, we could look at that US dollar relative performance. And by the way, the yen was sort of middle ground throughout the day. It never really did peg to the first or second strength story or first or second weakness story at any time. And so one thing that we've noticed throughout this week is the lack of clarity there with that yen. Now, you guys have traded with me and seen, and we want to take probabilities within a scope of at least a month, right? Take a look at the probabilities that they play out throughout, about a 30-day period. And we know that when the yen is at one side or the other, there tends to be at some point sort of this adherence to that risk off or risk on that the yen reflects. And risk off, of course, is weakness in equities and yen strength, while risk on is risk appetite or a willingness to buy stocks, and that's when the yen is over here on the right. So it'll be strong when stocks are weak. It'll be weak when stocks are strong, or it's going to dictate at least that reaction in the equities markets. So what do we do when it's in the middle, which is kind of what we've dealt with, when it's not really committing to one extreme or the other? So in the notes, I talked about a little bit, what are some of the things we can do to be a little bit more nimble? And so take a look at this note there. When the yen is, again, here's the screenshot of this morning. So what can I take away from this? It's not the first or second strength story. It's certainly not strong relative to the US dollar or the Canadian dollar. It's stronger than the euro, Aussie, New Zealand dollar, and pound, but it's not first or second, and that does matter, but it is a little weak. Now, that would suggest a little bit mildly bullish sentiment. Well, I have to be ready to play the market really in either direction when I don't have conviction from the yen, when I don't have conviction from the bond market, and other things that we would look at to measure risk appetite and risk aversion. But I think bonds and yen have been very, very consistent. Remember, we're playing probabilities. We're not playing certainties, and sometimes these probabilities will sort of stray. And I think we've seen a good week of that. So one of the things we can do is, when we don't have enough conviction from the yen at one end or the other of that spectrum of that currency lineup, we could just turn it into a very simple approach. What is the first V-score rejection that happens after the open? So the bell rings. Are we closer to the V-score extreme lows? Are we closer to the V-score extreme highs? Which is the first one that happens after the open? It could be right on the open. It could be a minute after the open. But what's the first V-score test? Extreme low or extreme high? In today's case, it was, you could have bought the mean pretty much right on the open because we retested the mean. And then it moved up to the +2, which had been resistance throughout that 7 to 9:30 period Eastern that we look for these V-score extremes. So the V-score resistance. So let me show you what the chart looks like. So give that a quick read. You have the notes already. As a member, I share these with you all, but take a look at the chart. All right. So what we have here is, here's your 7, right? That's 7 to 9:30. Take a look at your V-score. Mean, 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 boom. So right on the open, it's a mean test. I'm not shorting this on the open. right? All I can do is, that's my first V-score test. I don't really have bias, do I? And I don't, let me put all my cards on the table. I don't like trading this way. I would prefer trading with bias. I would prefer trading with the yen and bonds also giving me a clarity in terms of risk appetite or risk aversion in equities. But when I don't have that and I still want to put some kind of trade on with smaller size or using an option, I can play the long side. The long side would be the first one. And again, I love that the history of this V-score is here because, look, it is what it is. I can't go back and say it's not that because you can see how many times we tested this. So the yen in the middle, what does the yen in the middle tell us, right? What does the yen in the middle tell us? It tells us that we can play the first V-score test of the morning and we're not really trading with conviction to one side or the other, even though I'm slightly bullish, okay? So we bounce, and then let's go back. How many times since 7 a.m. have we exhausted at 2? Almost 2, but not quite. Here's 3 and even above 3, okay? Then after 8 o'clock, here's 2, almost 2, 2, 2. Boom, there it is again. Is this a great resistance level? No, but this area in front of +2, the +2 standard deviation, is this area at and just before, meaning like +180, 190. That area, going back in the history of 7 a.m. Eastern forward, has continued to be, as we can see, where we peak. Now, if that were to be broken, the next level up would be running towards +3, but that would be the second level. So you, right on the open, again, you're open to, all right, we're near the lower end of the extreme, buy, take profit. Quite frankly, you could have bought again here, but this is where it gets tricky. And this is why caution days are caution days. What happened? Well, you bought again, let's say. The market rallied up, but it never hit that V-score +2. And quite frankly, it would have been very difficult to say, well, we would have known. I like to avoid that because unless it's a process-driven level, sure, you could say, hey, on the price, we really kind of almost made a very loose triple top up here around 25.20 to 25.25. But I don't like to be that sort of freestyle because freestyle is the complete opposite of being process-driven. Okay, so that would have been very tough, and I want to make sure I'm clear on how difficult that would have been. Buy, and that would have been either take profit or short, right? That would have been the short side. You don't have conviction, and I don't like that sort of flip-flop, buy short type approach, which is why on a day like today, you get nothing, this crickets, right? I'm not going to put anything out there because I'm not doing anything. But next week, what I really want to emphasize is next week, if we get this sort of yen in the middle, let's just call it yen in the middle, not one or two, yen in the middle, what is that first opportunity after the open? Bottom of the range V-score or top of the range V-score? So keep that in mind. Check out these notes, and we're going to do this next week if this is still the kind of yen in the middle psychology that we are getting. We also had non-farm payroll. It was awful. So sort of, and I don't mean to mock the number because the number is horrifying when you think about the people without jobs, but I am mocking sort of the market's reaction, and that is awful news continues to be a bullish catalyst. We had an awful initial claims yesterday and last Thursday, and unbelievable 701,000 negative non-farm payroll. That's a mammoth number, and the market rallies. So kind of the joke is, if the data is awful enough, this means what? We will see the market anticipate that fourth round of stimulus. And right now, bad news is good news, or bad news is good for the market. Bad news is good for the market. That's sort of the insanity that we're in. And this is not unusual. We've been in different bad news is good for the market scenarios. That's typically when we feel the Federal Reserve is looking at certain data points and we're anticipating they're cutting rates or adding stimulus or increasing the balance sheet. And bad news, we know, sort of puts the screws to the Fed, and they've got to do this more accommodative type action. And let's face it, stocks love it. So this is not unique. This whole going down the rabbit hole of bad news is good for the equities markets. All right, so there's that. I think along these lines, again, We know what we like to do when the yen is number 1 or 2 weakness, not number 1 or 2 strength, but yen in the middle is something we'll probably be talking about for a little while longer. Okay, so that's the day trading, or lack of, but I wanted to give you guys a little bit of insight there. The kind of trading that's working really, really well right now, and I don't want anybody abandoning the yen, okay? Keep an eye on that yen. Sometimes it might be Aussie yen or dollar yen. Occasionally it's going to make sense to look at the yen across the board in terms of other currencies. When you notice the yen is stronger than this currency but weaker than this, and it's not really trading with a lot of conviction, strength, or weakness, that's yen in the middle. All right, but what has been working really well the last week? Again, don't abandon your process. We're going to go right back to those things that worked great throughout March. But what's really working well right now are daily time frames. So when we take a look at our Australian US dollar buy, when we take a look at our British pound US dollar buy, which are shorts in Aussie versus US, or the Australian dollar futures, or shorts in the British pound versus US, or British pound futures, this daily time frame correction to the upper end of the range, or even more appropriately put, the correction to the 21 exponential moving average, or the 34 EMA wave, that has been working fantastic. We finally are getting some follow through on both these narratives. And yesterday I talked a lot about how crude oil has been really hijacking the narrative right now. And if crude continues to rally, and if we can get that catalyst of the OPEC plus, and even the U.S. shale producers coming to an agreement about some sort of production cut, crude's going to rip higher. I think we're still going to see higher highs in crude before we get the opportunity to short it. So it's not just a technical short at a 21 EMA. Otherwise, I would have sent that out already, right? I'm still waiting for one of these technical levels to get paired up with the announcement that we have this agreement from these oil producers. So ultimately, it's the catalyst that's going to get me looking to fade the strength. What does that mean, to fade the strength? To sell into weakness. And so what I'm lacking is not the correction. That's happening. What I'm lacking is that final bit of news, which is going to, I believe, give us that final move higher. And that is the move that we want to take advantage of. That's going to be on crude. That's going to be on RBOB. That's likely also, and I'd love to see it play out, but that also could be playing out in the Canadian dollar. So again, something we want to keep an eye on. Now, in terms of the yen, let's come back to that yen for a moment. In terms of the yen is a powerful tool, gang. It's been one of those tools. It will always be, I believe, one of those tools where when we see flow in and out of it, it's still going to tell us a lot about the markets. Aussie yen in a downtrend tells me a lot about Australian dollar as a commodity dollar, as a currency that should do well in a strong and growing and expanding economy, and the yen, which should be weak, being borrowed, being sold, funding the purchases of higher yielding assets like stocks. That downtrend in Aussie yen, that downtrend in even New Zealand dollar yen is very telling, and it gives us opportunity. Short the weaker COMDOL, buy the yen. So where else could we play this? Well, it's going to play out just like our US dollar. Short against the New Zealand dollar, Australian dollar, Canadian dollar, British pound, and euro. So a lot of folks have been asking me, well, Rog, how do I play the euro right now? And I'll tell you, it's not against the US dollar. It's hardly against the yen right now. It's not been a really steady trend. When you look at euro US, when you look at euro yen, what we lack here is the gorgeous trends that we have in things like Aussie US and Aussie yen. So even though euro sort of becomes this sort of habit to go trade, let's go trade the euro. Well, why? Is there a contrast advantage to this extreme amount of euro weakness to dollar that's organized into a trend? Even though the moves in the euro US might seem bigger, right? That swing today or that sell-off yesterday, those are some big candles, and traders think, surely there must have been an opportunity there. And what I like to remind myself is, it's not about one-day moves. It's not about one big candle. It's about, can I position myself in a way where I feel I've shorted at the top of the range or a retracement and bought at the bottom of the range or a retracement. If it's chop, it's a little bit of a coin flip. Chop is harder to determine the levels within. It's harder to determine the sentiment, when it's going to shift, because it shifts so quickly. Okay? Stick with those other four currencies: Aussie, New Zealand dollar, Canadian dollar, pound, and then maybe consider euro. And please do not play the US dollar versus the Japanese yen, which is why when I'm looking at yen strength and weakness, I don't want to just look at it versus the US dollar, but I want to look at it in terms of a lineup of, well, who else are you strong against? And when you're stronger, when this yen is stronger versus the Canadian dollar, New Zealand dollar, Australian dollar, there is a message being sent there. The equities markets can ignore it, especially when narratives like crude oil take over, but typically the currency market is going to tell you what central banks are most likely to do, what the larger trends in terms of flow are doing, and the equity markets will sort of fall back in line with that currency written narrative. Okay? All right. So that's what we've got right now. I'm looking forward to this month, sort of getting past the last 3 days of the prior month, getting past the first 3 days of this month. And I'm actually near term a little bullish on a bounce in the euro and in the NASDAQ, because what will happen if we can bounce up to the top of the range? Well, we can short it. And that's really what I want to look for. So sometimes as a bear, the most bearish thing you can be sometimes is a near-term bull. What does that mean? I want to short this market. Who am I rooting for? I am rooting for rally towels swinging, rally caps on. I'm rooting for the bulls, because bulls are going to drive the market up to this top of the range, 34 EMA zone, and that's where we can short it. So be careful being bearish down here. That's the bottom of the range. You want to focus bearishness up in here. And that's what I mean by ranges. Okay? We'll talk a lot more about this next week. Check out the notes that I've sent out via the alerts. They're also in the chat room. And I'll see you in the next update.